Good morning to those that are with us. I'll introduce myself in a moment. So, Nick, whenever you're ready, we can change slides. Thank you very much. Right, good morning, everybody. Welcome to the webinar. The webinar today is conducted by myself and my colleague Jamie Houseman, who's a BHP expert on taxation duties and all things related. To introduce myself, my name is Paul Blackman. I'm a business improvement consultant for BHP. I tend to specialise in things manufacturing, logistics, retail, and all areas of business operations. My experience very much gained at a senior level in the UK and in European businesses as both as a supplier and advisor. I've structured process design, evaluation, growth, and the running of multiple businesses which have been focused on import and export and very much sustainable practices. Customers, just to sort of parameter it, people like Amazon, Electrolux, Tesco's, and many others, and that's a direct sort of supply route for them, which has been quite challenging. Therefore, the webinar, from my point of view, is intended to explain very much from a commercial perspective and strongly backstop with Jamie's expertise on taxation duties and the considerations thereof. So as a sort of throw-in point from me, I'm very much a firm believer in the principle that business will overcome whatever challenges occur, simply because it has to. So as we move forward, we've got the things up on the screen to look at, and we'll try and walk through quite a lot of data. So Nick, if you'd like to kindly swap screens for me. Thank you very much. Right, so if we look at importation as a bit of a scene set first, you know, for an awful lot of years now, it's been the sort of standard way to import a lot of goods, do a lot of things with them, and maybe export some, maybe not, maybe sell internally, maybe use them differently. But with all the things that are coming round as a general sort of noise surrounding, there's things to consider. So as a bit of a thought, you know, UK brings about 49% of its total imported value in from the EU. Interestingly, food's not in the top 10. I'll just give you the top 3 just so everyone parameters themselves. Sort of gems, precious metal, machinery, computers, vehicles, electrical equipment, all sort of are in very much the top. And of the top 10, you know, 66% of those, you know, are used by most people and most industries. So imports, I think, are going to very much going to continue, but I would venture perhaps differently. So if I move on to the points that we have on the slide. Sorry, Nick, just go back a slide, please. My fault, I said that badly. Total costs associated, that's something that for a long time has been fairly straightforward for people to understand, and it's starting now to become more complex. So if we take a general point that most goods come into the country containerized, you know, whether we're into that world or not, we bring in an awful lot of containers into the UK. Probably the 2 biggest ports are Southampton and Felixstowe for containers. For many years, you know, container prices were fairly static, somewhere between £2,500–3,500 plus duties and so on and so forth. Now it's not unusual to be seeing a 3 times multiplier on those sort of costs, just as a simple standalone. So straight away, what was an easy calculation is becoming very challenging for people. Added to which, the Chinese New Year always adds complications, which is early February, I believe, and we're suffering from, I think, the whole problem surrounding COVID, which I'm sure none of us need to be reminded of. But if we look at the unload times now in the UK ports are running at sort of 2 to 3 weeks, and in some areas more, the whole opportunity of seeing easy imports and lower price imports, I feel, is under challenge, and I think that's going to stay under challenge. So I think part of the things to consider as we look at total costs is, you know, all of those things and more. And I suppose as a takeaway point, what was an easy decision is now more complex, and it can very much affect the viability as selling prices will come under pressure. So where it once was is not where it is. So things basically to stick into your total cost to consider. You've got the things that are very much legislative, you know, duties, taxation, which is where Jamie will do his specialist knowledge. But if I just concentrate on sort of business needs and just put some bits in there, you've got things like additional transportation and freight support costs, you know, your freight forwarders, your logistics costs, your increase on insurance due to whatever terms we have, whether we get a deal or not with Europe or others, you know, that all that's got to be factored in. Quality and compliance things, they've got to be factored in, because as people start to try and potentially cut corners or bring in product different ways and quicker, and because they're having problems, will come under pressure. So there's going to be lots of things, and I think the thing that's going to be probably at most people's minds is the increase in inventory, and very much the increase in minimum order quantities, the extra cash needs, and very much the reduced selling prices. I would think that most people are going to struggle when it actually comes to understanding what to put together. So that further puts pressure under the management sort of banner of your business, and it's going to be a lot of pressure. So the big question there is do you have enough management support, and who's doing it, and do they have the skills? So I would suggest that always look at what you're going to need and look at that as a value add option, as the correct use of it will make significant differences. So we need to sort of look at this differently. So that moves on very much to this bit about supply agreements. I have a very clear view of this, is that every supply agreement you have has got to be matched to what you are needing it to do. And it sounds a bit of an obvious statement, but obviously it's not. So your demand is what's driving your importation needs, and that need has got to be matched to what your customers want. So for example, make sure that you are building your supply agreements around a fair partner approach, but they are also protecting your needs, and they are covering very important points like your technical specification, your country of origin, your ordering structure, things like Incoterms, which we'll come to, quality assurance, and the legality of the whole thing. I can't sort of expand enough. Get good legal advice around this, and make sure that you are absolutely clear on where it is enforceable, and within the supply agreement, make sure you have break clauses, how to address remedy, and how your brand is protected and the basis of it, because you just don't know, you know, what is going to happen on the demand side of your equation, and it might indeed need you to cancel orders, change orders. You do not want to discover that you have a massive financial undertaking of which you can't move forward with. So next slide, please, Nick. So lot of things around this. Incoterms, often the province of freight forwarders and shipping agents, but I believe they're becoming more important. So just a few things there. Most people just say it's Incoterms. Well, if you don't know, they mean international commercial terms. First published by the International Chamber of Commerce in 1936. They are there to clarify your international trade position. They are pretty explicit. You know, they're very, very useful. They're not overly complex. They're very clear to use, but they do need interpretation with expertise to make sure you're using the right thing. So generally, there's about 11 Incoterms, and some of them sort of very much are any mode of transport. Some are to do with, you know, use of waterways, but they really all split into whether the freight collection or the freight is prepaid. So bluntly, freight collect is what the buyer pays, freight prepaid is what the seller pays. So they need to be into your contract, they need to be very much structured, and they need to be referred to on your invoice. So again, that'll be a little bit more of what Jamie says. So I'll leave the taxation, duties and management options a little bit in there very much for Jamie to come under. But the next bit of this is things like how you ship and all those sort of things. Most people, if they're importing or indeed exporting, would be using some sort of vehicle. Most people use a containered approach. So it's understanding what you're going to put on it, where your risk transfers, where your ownership transfers, and where your insurance covers you. You must always understand that in considerable detail. You do not want to be relying on hit and hope with this, because you might have multiple thousands of pounds engaged, of which can, if you're relying on the parts, for example, to fulfill orders, you might actually be under penalty clauses for failing to fulfill. And if the error is yours, well, then you bluntly have nowhere to go. So if I look at commodity codes and usual forms of handling, if I look at this perhaps differently than Jamie, but we're meeting the same point. Commodity codes very much define, you know, what you do and how you're going to do it. So they also make sure, in legal terms, they classify your goods correctly. You know what your rate of duty is on them and your import VAT, but you also know if that duty is suspended, if you need a particular license, if your goods are covered by specialist things like anti-dumping duties, tariff quotas, so on and so forth. So the use of a commodity code, yeah, often not always appreciated by the user, but incredibly important. And I think in part of the understanding your total costs and understanding your decision on whether to maintain your supply chain as it was or as it might be, commodity codes are right at the fore of that discussion. Added to that, I mentioned very briefly about the pressure on UK ports. The UK government is promoting the idea of free ports, a little bit more around that, I'm sure, from Jamie, but it fundamentally is ways of helping the tax and duty structure make it flow better. But around that, there comes sort of specialist logistical things, which I'll just tackle very briefly. So things like usual handling, that's best considered in discussion with your freight forwarder or a logistics expert such as I. It really is more related to the specialist area of logistics, but it is likely to come to the fore a bit as the nation decides on which way it wants to go. So just adding sort of some meat to this, many people now are sort of importing and re-exporting product, and that very much involves advanced logistics techniques. You know, there's things like cross-docking and drop shipping, and they're fantastic things, but they must be modeled out properly. And before you begin that, is use the specialist knowledge from your tax duty advisor to model where you are. you might discover, for example, that yes, you are saving a price on your logistic costs, but you are spending more on tax or vice versa. So very strong point there is before you do anything, model it, check it, and test it. You know, just because it's the latest technique doesn't mean it is absolutely right for you and yours. So just to add some meat to that, drop shipping very much is a retailed sort of fulfillment method. The best way for me to say it is that the goods are not owned by the seller. They basically call them off and are looking for someone to deliver them as a third party, either into someone else's warehouse or into someone's store, or in extreme cases it might be to an individual. But it's an interesting one to consider, and it's one that is becoming more and more common, and I think that it will probably be more and more used. But I suppose the one that's going to be used more ever now is the cross-docking approach, and that really is to say goods coming on one method, or let's say one vehicle to keep it simple, it's unloaded and literally swapped into another one and sent somewhere else. So that again needs to be very carefully modeled, and it's very much the model that's used by international sellers, and because it creates such a seamless approach in the supply chain. Really interesting in many ways, but incredibly difficult to make sure it's done properly and maximized and optimized. I've been involved with it for a long time, and I would say to you that without the use of a tax specialist, you are missing your opportunities fully there. So understand that one clearly. So Nick, please. So if we turn to the other side of the coin, shall we say, to export, as you can see, the note I made on the screen was, it may be a new approach or a refocus for many, but there's much to consider there. So just a bit of a scene set there. UK goods and services, without question, are in demand, but before you start that, you know, does it suit your business? Does it suit what you do? And can you do it? So just as an example, which is something I was actually quite surprised at, it's only about 10% of UK businesses actually currently export. So there is much opportunity for people to export, but it doesn't suit everyone. About 45% of volume currently goes into the EU. Okay, if we have to get into the tariff point, that comes into, again, the discussion on how much is it going to cost? Are you getting the value back on it? But top 10 items really that are going out as export nationally are a bit surprising. You know, it's still cars, it's still mechanical power related, it's medicine, it's pharmaceuticals. And apart from Europe, we do export a lot to the USA, but we really are centric around sort of Germany, Netherlands, France, and Italy. But there's much opportunity when you look around the world map, which does seem to be getting smaller, in new markets, which are very much Russia, the Far East, massively including Singapore, parts of Africa, Japan, and if you said Asia in general. So those are all great opportunities to enter into, but that entry point is really based on a number of key considerations. So Nick, please. Thank you. Right. So if you are gonna consider exportation, there's the real need of the chosen market. Now, it does always sound simple, this, but it really is not. The research side of it is that you really do need to understand what the consumer needs, because a product or service is suitable to one market does not guarantee its suitability to another. Conversely, it doesn't confirm that it isn't. So the research really is building up your business case, and this point of building a business case has to go across all of the things before you even begin the start. So it's not about getting it wrong. There is much detail available from the Department of Industry and Trade. There's specialist researchers, and there's also this whole use of should you have in-country distributors and agents, which I'll touch on later. But as a major point there to take away, and it's a bit of a lighter side and something I've been involved in, that countries, for example, that are coffee drinkers are unlikely to buy electric kettles. Now, it sounds easy, but there's so many people who have failed in understanding that message. And the longer point is you're not going to sell vacuum cleaners and carpet cleaners if people don't have carpets. And conversely, you're not going to sell electric cars if people don't have charging points. Sounds simple, but we've got to really got to get that one clear in the research and build the business case. That then moves forward into enforceable agreements, and the agreements to me underpin everything that you're wanting to do. They have to be contractual. They have to be enforceable, yeah, and reference to a point in legal position, i.e. UK law, but they massively need to serve the need of what you're trying to do. It's not only a legal thing, it's actually how you're going to make the thing work. So I always say to people, don't have it as a thing that you pull out of your sort of desk drawer and start waving around. It's actually your live document of how you're going to do things. And the remedy is far more important than getting into a battle, because at the end of the day, you are trying to do the things you were trying to do. On disclosure of information then, it's very much about what you need to say. Different countries have different needs. Some people sort of will say, well, I'll just use what I've used in the UK and move it on. It is not the same. For example, if you're going into somewhere like Singapore, for example, you need to use specially treated pallets. You need to have that license. You need to, against the standard, you need to supply the information. If you're going into Saudi Arabia, for example, you need to have a proper licensing structure with an independent verification. So all that disclosure of information needs to be known and really carefully mapped and again put back into your business case. What I always say to people is make sure that you build up a clear matrix of all the things you need, have a group approach to doing it, and have an independent verification. It is better to spend the time at the front end of it. It is always cheaper and easier than finding you've got a problem. You cannot decide you've got a problem. So just making a finishing point with product suitability, you know, we don't have a worldwide status on how things work. For example, electrical products, which is something I've very much been involved in, you know, they have different voltages, they have different types of plugs, they have different responsibilities for labeling, loads and loads of things. So make sure your product is completely suitable for the markets intended, and that if it is going to cross markets, you know how that's going to happen. And in all of this, make sure that the consumer knows how to use the product in a language that they clearly understand. Otherwise, you end up with masses of issues. So, have you decided and mapped how you're going to supply? Again, it sounds reasonably simple, but it's incredibly complex. So B2C, I'll start with that because that's such a major area now. There was quite an interesting point made by the UK government about the use of B2C third-party sellers because they're so good at it. Well, yeah, that's bluntly the Amazons and eBays and so on and so forth. They're experts at it. They're very good at it, but there's always a very huge but there. You need to make sure that that is absolutely right for you and your business, because you are handing over the control, you are handing over your data, you are handing over your consumer fundamentally for them. So I've set businesses up in Germany, in Czechoslovakia, in Romania, who've all actually been set up by a number of the larger players to actually trade into other countries. So that is because they've seen the opportunity, they've seen the advantage. So I would say to you, before you say the only game in town is use a third party, there's your own website. You know, you could form your own website. There's developed selling packages now. There's very developed methods that are around it, but you need to make sure you fully understand the explicit terms of the product, the individual countries it's going to, and have a clear agreement in place. Again, seek professional advice on this, because I've seen a number of people who've been caught out where they've supplied a product. It is then entered into what these people would term as their global supply chain, to find that it creates a problem for the brand owner, because their product is received a bad reputation, bad social media feedback, for no fault of their own really, apart from they didn't spend the time on nailing down the agreement and the structure first, and at the end of the day it's their brand that's damaged. So again, it's about your agreements, it's about what you want it to do, and it's about what you don't want it to do, with particular care on the use of language and explanation. People use translation services. Yeah, they're okay, but they're never going to be as good as an in-native speaker or in native use. So use that with considerable care, and make sure that your legal statements are suitable for each country that the product is likely to be sold into. So there's a general point there. Process map it out. Make sure, again, you discuss all of this with your taxation expert, understand the implications of it, and really think it through and cost it out, and understand the pitfalls as a negative to this. It is full of opportunity if done well, and full of nightmare and trauma if not. So I can only say to you, many people get it right, many people get it wrong, and those who get it wrong, where bluntly I've had to get involved and help them, is because they've not put the time in the front. Okay, so B2B, pretty straightforward really there. I would say that's a pretty straightforward transaction, again, with agreements, with structure, taxation expertise, but there's a few things that are a bit simpler, but that can take different amounts of time, but you're generally dealing with people who are wanting to work together, so it might work. But the general way that that's considered is the use of agents and distributors. I'll sort of make a major point here. Both agents and distributors need a clear agreement. They need structure on what you want them to do and what you don't want them to do, and to make sure that that is giving you what you want, not what they want. Remember that they make margin through fees or selling price or whatever. You've got to absolutely be clear on what you want them to do, where you want them to do it, and how they protect your brand and all the things that surround it. It is not as simple as just saying, oh, I've appointed an agent or a distributor, which there are differences, and left them to it. No, they're representing you and your brand, and it is you that will have the problem if it goes seriously wrong. So Nick, please. So we've decided we're going to do some sort of exporting. That's fine. That's great. So do you need to set up a helpline? Well, I I would always say that if you're going to sell a product, well, you want the consumer to be absolutely delighted. Either come back to you because there's a problem, or make sure they tell others when it's really good. You know, what you don't want is a nightmare. So helplines very much avoid having disaffected consumers if done well. They are a specialist area. They are generally set up through in-country providers. I've set up a few, and I would say to you that you need to have a very clear specification on what you want the helpline provider and the helplines to say, and make sure that you regularly check it and test it independently and seek a real clear data set on what it's providing, because at the end of the day, they're representing your brand, and they are probably able to give you the most help or potentially the most damage of any of the services. If we move to product support options, well, depending on what you're doing, you might have a product that needs some technical support or explanation of how to make it work. You know, we can all think of the computerization and that sort of thing of our society. There's many people who buy sort of equipment like that wouldn't know how to use it properly. So why would it be any different in you know, a third country, for example? So you make sure that your product support options are considered in detail, structured properly, and don't underestimate how much they cost. They're very expensive, but they're not as expensive as not doing it at all. And then there's the final thing, which seems to be often misunderstood by people, is reverse logistics. As consumer terms now are so explicit, people have the right to, you know, they'll pick send me a blue and green one and I'll keep the blue one and send the green one back. The problem is that often the green one is damaged in transit or it's not complete, but you need a whole structure of dealing with that, let alone if there's a problem with the product and you need to exchange it or replace it. So the reverse logistics model, again, done lots and lots of these. I can only say to you, you must look at this really carefully, because it's this seamless support of the consumer, and it's that bit that is often forgotten. There are many specialists who are good at it. It comes at a price, but again, it can be modeled, looked at carefully. There's also all sorts of interesting areas around duties and taxation and everything else that come from returning products and so on and so forth. So again, needs to be mapped, needs to be considered, and it needs very much to be thought through before you start. So again, it's this total cost of ownership approach. So Nick, please. Thank you. So obviously comment there is the total cost model. So what should be included? Well, it's everything that you would have to include, if you like, to sell it in your native country, plus all the things that come from the distance and legalities and changes. So it's really best considered to be a standalone business case. And I generally say to people, if you're going to export, mentally consider it as a separate business and understand that the costs are for that. Build up a very clear matrix of everything that needs to be in it, and make sure you put some form of contingency in that, because there will always be something that comes out. Please don't think of my comments as negative. They're not meant to be, but they're making sure that the process and the project starts well and gives you a financial return that you're expecting. You do not want to discover that you've got a major nightmare at the other side of the world. So if we look at skills and availability of the team, this is often sort of missed, really. Just because the team are used to doing something in one country does not mean that they'll understand how to do it in another. It doesn't mean they won't, but it should not be taken for granted. You have to be totally realistic about the skills of your team, and if you don't have the skills, so be it. You don't have the skills, but invest before you start, or find someone that can actually do it for you, so you are actually staying in control and you're able to manage it. If you lose the management of anything, you begin the firefight, and the only thing that actually follows from a firefighting approach is cost overruns and ultimately financial poor performance. So not good. On the payment side, this again is where you need specialist advice. There's many ways of taking payment, but it needs to be agreed and mapped out very carefully and looked at the best opportunity for you, what suits your Incoterms, what suits the way you want to run your business, what are your cash flow implications, what are the risks, what do you feel about, dealing with a particular country. There's lots of information, there's lots of systems, but you need to have a clear criteria why you choose what you choose. I don't have a fear so much now on payments. At one time it used to be quite traumatic, but it just needs to be really thought through and mapped out properly. Okay, your brand protection legal implications. Well, this again, I can only say is the area of legal specialists, because there's much talk now about changing international copyright, changing international trademarks, intellectual property, all of those things. Again, it's not secret information, but it's incredibly important to consider it, get it right, and understand it and assert it in law properly, because you do not want to discover the problem when you're in a position of being able to do nothing about it. So product safety, we nationally are very good at product safety. We understand that, but you've got to make sure that the accreditations then become international. So, for example, I mentioned that USA is a big market at the moment for UK. Asia potentially can be. They have different accreditation needs on safety. They are not difficult to achieve, but you need a specialist accreditation agency to set up your test regime, your licenses, your statements. So they very much are the people you need to go to. The UK has many of them. It has probably some of the best in the world, but do not miss the point that you need to fully tick product safety and accreditation terms, and particularly when it comes to your insurance and your brand protection. So the third-party accreditation agencies cover, yes, what I've just said, but they also make sure that they are part of your thinking about things when the product is, let's say, in the country of your choice. Are they making sure that it's handled how you want it to be? Is it properly described? It's like a good way to say you're backstopping yourself and making sure that things are done well. So Nick, please. So I thank you very much for that. I would say that there's a lot thrown in there, and I'm sorry if I've gone through things pretty quickly, but I think the major takeaway from me is that importation, it's about what is not necessarily right for now. So map it out properly, look at your demand profiling properly, look at your supply agreements. Is it all aligning to your needs? Are you using the right specialists? For example, your freight forwarders, don't buy ever freight forwarding services on price, buy it on total value. You will honestly realize the value of their expertise the first time there's a problem of you trying to get your goods through customs or whatever it might be, where their expertise just delivers what you need, and you'll just be very thankful that you use an expert. So the point I always say to people is value is what you create and your customers pay for. Cost is static, accumulates, and actually starts to erode your business. So seek the value option there. On the export side, summary is that it's a fantastic opportunity, but has to be planned properly, detailed, and its different needs fully appreciated. So having exported goods basically all around the world, I don't, and you shouldn't find it frightening if it's done correctly. But if it's not, it'll be probably the worst nightmare that you can consider, because you've got distance, language barriers, cultural barriers, and how do you actually service the problem? So I'll hand over to Jamie now, who will look at this from a very different perspective with his considerable knowledge, and I wish you all well for the rest of the day. Thank you. And over to you, Jamie.
Thanks, Paul. So as Paul's mentioned, I'm going to provide you an overview of the tax and compliance changes that are coming in on the 1st of January. A bit of background about me. So my name's Jamie Houseman. I'm a senior tax manager in the Leeds team. Not been at BHP very long. Prior to joining BHP, I worked for McLaren, the car company, where I was a tax manager for a number of years. And that's where a lot of this knowledge is coming from. Big business that moved lots of goods around the world. I was on the Brexit steering committee there, sorting out the customs issues. And so that's where I picked up a lot of this stuff. Just and apologies in advance if any of you have seen, I've done a number of these presentations, so a lot of the slides are cribbed from those, so you may have seen some of the content before, but it's always good to look over it again. So let me just move down my notes. Right, what's new from 1st of January? So on the 1st of January, the Brexit transition period will end. So we actually left the EU legally on 30th of January this year. And since then, we've been in the transition period. Now, transition period won't get extended. There's no legal basis for that. So these changes will come in. And just a point on the deal. Now, the deal, it's sort of been portrayed in the media as a silver bullet that'll fix all of our Brexit headaches. It won't. From a customer's perspective, the deal's fairly isolated in that it'll reduce some costs, but there's still going to be a lot of new changes that are coming in that will happen regardless. And so if you're a UK exporter, these are broadly what they're going to be. Somebody will have to do an export document out of the UK, and then somebody will need to do an import document into the EU. Potentially, there will be the payment of import duty in the EU. There'll probably be the import VAT to pay in the EU as well. Now, if you're an importer into the UK, then it's the same process but in reverse. Someone has to do an export document in the EU, someone has to import it into the UK, and then someone has to pay import VAT and potentially import duty. Now, if you could skip on to the next slide, please, Nick. Go to the next one as well, please. So you'll note that I was saying someone. Now, a key question is who is that? So we've seen there's going to be some new compliance and taxes, but who actually is going to be the person responsible for that? Now, Paul touched on this earlier. It's down to the Incoterms. The Incoterms determine who has to do the customs compliance and who has to pay the taxes. So a lot of people go, I've never heard of Incoterms, but a lot of people actually have. You come across Ex Works is a popular one, deliver duty paid. Now, and they're the two really important ones. So anything in the middle, it's fairly straightforward. The seller will do the export document out of whatever country, and the buyer will do the import document. So if you're a UK exporter, let's say, and you operate under Ex Works, you sat there thinking, great, I don't have to do anything. Everything is the responsibility of my customer. Now, on paper, that sounds wonderful, but practically, is that going to work? It's going to create new headaches for your customers. It'll undoubtedly create new costs for them. They're going to have to import. There'll be VAT and duty to think about. And could this dissuade them from buying off you? Similarly, if you go, well, we don't want to cause any problems for our customers, let's put them on DDP. We'll do absolutely everything. That creates a lot of new headaches for you, potentially around VAT. VAT is the big one here. VAT is more expensive than duty in most cases. So, and people often overlook it, thinking we can just recover it or we don't have to pay it. It's not true. I'll come on to that later on, though. So, next slide, please, Nick. I've spoken about the import and export documents. Now, this is broadly what they are. No, it's a bit of no one really knows what they mean, but it's a document they fill in with lots of information on. This is a UK import document at the minute. It's called a C88, or a single administrative document, and at the top you can see it says European Community, because it works across the EU. We're in the customs union. Now, what it does is it gives lots of it gives HMRC lots of information that basically enables them to work out what duty is payable. So one key point is you only ever pay duty unless you're selling excisable goods on import. So an export document looks pretty similar, but it's for the other person at the end. They can look at the export document in the country it's coming from to pull together the import document. And yes, so upon import, you will pay import duty, or potentially will, and this enables the tax authority to work out what that is. Number of boxes on it, and now I'll go into the import duty side of things to give you a flavour of how it works and what it's determined by. So if you could go into the next slide, please, Nick. So import duties are determined by three things. Classification, what is that good? Commodity code. Second thing is valuation, simply what it's worth. And the third thing is a bit more of a complicated one, but I'll try and give you a brief overview of it, and it's where does it originate from. So I'll go through these in a bit more detail now. So over to the next page, please, Nick. Right, so classification is your commodity code, and basically every tangible thing you can think of has a commodity code, and with that is a import duty rate. So I've got a few examples on there. It goes into very specific detail. You know, the spaceships, the beer, the animals are ridiculous. You get really distinct commodity codes for different types of animals. And then you get a commodity code, which is an 8 to 10 digit number that you put on your import document, and that allows the tax authority to come up with a percentage. Just a note on those percentages. From 1st of January, the UK government, so just UK only, doesn't apply to the EU, obviously, are reducing import duty rates for over half of all commodity codes. So they'll either reduce them or eliminate them to basically help UK businesses. And you know, this it varies. It's all determined on what we make here and what we're going to have to import. But you could see a bit of a win there if you're importing from outside the EU at the minute, because it applies to those goods as well. So commodity code gives you a percentage, but what do you apply that percentage to? So to the next slide, please, Nick. You apply it to the valuation. So 9 times out of 10, probably this is going to be the price you buy it for. But there's often things you need to factor into that. So if you've got tooling at your supplier's place of business, you might have to put that into it. Or if you give them a rebate, that's going to knock down the price. So there might be some adjustments you have to make to the price on the invoice from your supplier. The other thing to think about is if it's not an arm's length transaction, if it's from a connected party or your own goods, there's not going to be a transaction taking place, or if there is, it's not going to be an arm's length basis. So you might have to use a different method to work out what you value you put in your import document. And there's 6 of these broadly, and you have to go through them in sequential order. And if you need any more information on that, we can help you with that. So you've got your percentage and you've got your value. Now, the only thing that might impact that is origin. So if you go to the next slide, please, Nick. Now, potentially you'll get a lower rate of import duty if there is a preferential or a free trade agreement. And this is where, when I say about a deal, this is where it comes into play. So if we get a deal, there'll be hopefully free trade on all commodity codes coming from the EU. But they have to originate there. So it's not good enough that they just physically come from there. They have to be made there broadly or created there. So this, what determines origin? The rules of origin are very complex and they vary for every different commodity code. So, you know, for one thing, it might be simply that it's created there, it's grown there, or it's the animal was raised there. But it often gets more complicated as you get to more complicated pieces of kit. So I used to work at McLaren and I had to look at this quite a bit. Now, for cars, there's a specific rule that your good originates in the place you're from when it's got a certain amount of originated content. So what you need to do with this is I had to take the value of the ex works price of the car and work out what percentage of that didn't originate in the UK. And if it was above a certain threshold, which that threshold varies between different free trade agreements, I couldn't put that stamp of origin on that car. It wasn't classed as originating there. So this was a big thing for Brexit, because the cars were made from different parts that came from all over the EU. And we still wouldn't get, because we're losing the EU rules. We're all in one customs union at the minute, so it's like an EU origin at the minute, not UK, but we're going to UK. So if there wasn't enough UK originating content in there, because the gearbox came from Germany, the brakes came from Italy, then we couldn't put that UK stamp on it, which means that we wouldn't benefit from a free trade agreement with a third country. So we just signed a free trade agreement with Japan. Potentially a McLaren car wouldn't qualify and benefit from preferential trade with Japan because of this. Again, that's a really complicated area, and it varies from different commodity codes. But hopefully that gives you an idea of origin and customs duty as a whole, to give you an idea of whether this is something you need to worry about. So if we move on to the next slide, please, Nick, and I will talk about VAT. So, excuse me. So because coming into the UK, there's arguably positive changes. So from 1st of January, HMRC are introducing something called VAT postponement, which if anyone imports from outside of the EU at the minute, you'll know that you've got to pay your import VAT at the port, which is a cash flow disadvantage. You know, you've got to pay 20% of the value of goods as soon as it comes in, which, although you get it back, there is a time delay for that. So from 1st of January, you don't need to do that. You can self-account for your import VAT, and that applies to goods coming from the EU as well as outside the EU. So you'll get a certificate from HMRC saying these are the value of the goods you've imported. That's the VAT you've got to pay us, and that's the VAT you can reclaim, which happens at all the same time. Is there anything else on that I need to think about? Yes. So one thing to note here, we've seen a number of problems with this. For you to recover the import VAT, you have to be the legal owner of the goods. So if you're for example, a toll manufacturer, or somebody doing modification or repairing goods for other people, you need to look at how you're going to manage this, because you'll be paying 20%, or potentially you'll be paying 20% VAT on the goods coming in that you won't be able to recover. It'll just be a sunk cost unless you're the legal owner of the goods. So something to think about there. Potentially more complicated, if you flip over, please, Nick. Is EU VAT, because again the same thing's going to happen when it goes into the EU, and there aren't the relaxations that HMRC have introduced across the whole of the EU. So for B2B, it's probably less of a problem, because the import VAT should be recoverable by the businesses, provided they're VAT registered and they're not exempt. They should be able to get the VAT back. There may be a cash flow disadvantage, so the businesses might moan and shunter because they've got to pay the VAT out, which, again, this is a risk. They may choose to go to an EU supplier because they don't want that cash flow disadvantage. If you sell under consignment stock or call off, then you need to think about how it will work. There's potentially an EU VAT registration requirement now. There was previously simplifications there, but they're going away. Probably more of a headache are B2C supplies, because the businesses we've spoken to have said, we want our customers to have an easy ride. We don't want them to have to do much, and we want it to be nice and easy for them, like it is now. But you're not going to do that anymore. You're going to have to import that in the country that the goods go into. If any of you ever imported anything from America or China or something like that, personally, you probably know it's a pain in the backside to deal with, because you've got to pay Parcel Force all the duties and VAT before they even send you the goods. The same thing potentially could happen to your B2C customers. So what a lot of businesses are saying, we'll move them onto a DDP Incoterm. We will do all the import duty and import VAT compliance. We'll pay all that. But then how are you going to recover that import VAT? Can you take the hit? Can you afford not to recover there? Or do you need to recover there and submit VAT returns to recover it? Just one note on B2C supplies. So there are rule changes coming in the summer that should make things a bit easier, but nothing's been published yet. It's still a bit unclear as to how that'll work. So if you are in a B2C scenario and you need some more help, please do get in contact. Right, we're nearly there. Nick, if you could flick over, please. So very quickly, what are you going to need from 1st of January? So if you're an importer or an exporter, you're going to need a UK EORI number. Now, you should have one of these already. HMRC should have issued them if you're sending goods or getting goods from the EU. If you've not, please get in contact. We can probably get you one before the end of the year, knock on wood. You may need an EU EORI number if you're planning to import into the EU. Again, if you need help with that, please let us know and we can try there. And just, you're going to need a way of submitting import or export documents. Now, most businesses I speak to use an agent for this. A handful have looked at doing this themselves, but it involves putting a piece of software in that links into HMRC system, which isn't particularly cheap. So you're going to need an agent in most cases. Now, think about what they're going to charge you, what their process is going to be, and whether they've got capacity. I struggle to get people to do export documents for me in the run up to previous Brexit when I was at McLaren. Finally, how do you pay these things? So we've already mentioned about import VAT. You don't have to pay it at the border anymore. For import duty, the default is to pay it at the border when it comes in, which can often be a bit of an issue if you don't want to be making back transfers willy-nilly. So one thing to look at is a deferment account. Now, most of your agents will have one of these and say, yeah, you can use our deferment account. There'll be a nominal fee for it, but that nominal fee adds up. So you can get your own deferment account if you want one, and it shouldn't cost you anything or require any major hoops to jump through, provided the amount of duty you're going to be suspending on a monthly basis is less than £10,000. If it's more than that, you need a bank guarantee or an insurance product. But again, if you need information there, please get in contact. So that's it from me on duty and VAT. Hopefully that gives you an idea of the changes that are coming in. We've got 3 minutes now for questions. Apologies, it's not very long, but if anyone has any burning questions, please post them. If not, we can wrap up. We'll give it a couple of minutes just to see if anything comes in. And if not, we'll call it a day.
Okay. Just to say, apart from thank you, Jamie, excellent as ever. Thank you everyone for attending. I've left our contact details up on the screen. Nick will probably kindly put some questions up, so you can give us some feedback, because we might be able to use your feedback very positively and look at things that you want to talk about or understand a bit more or whatever it might be. Apart from anything else, it's always a pleasure to speak. So thank you. And if we get some questions, we'll answer them. If not, we'll wish you a
one question. I'm responding it now.
There we go. So we have some, do we?
Well, there is a single question. So do you have to provide a commercial invoice and packing list? Probably, but I would recommend that you speak to your freight agent or your customs agent to understand exactly what they're going to need. There may be different requirements if you're moving food or plants or things like that. There's more complex requirements. So yeah, but broadly you'll need something with a value on an invoice or commercial invoice. You'll need a packing list to basically set out what's on there. No more questions? If there's no more, well, you've got Paul and my email address there, and there's a telephone number there if you need to get in contact. If anything comes up afterwards, please do get in contact, and if not, have a lovely Christmas and good luck in January.
Yes, echoed thoughts. Thank you, everybody.